Alright, let's look at SOXL, which is the Direction Daily Semiconductor Bull 3X shares. So it's a triple leveraged ETF and it's got the semiconductors in it. So let's go to tradingview.com. Make sure you're on supercharts. Go here. You should have this up already. And it's always very difficult to get to. So I have to move it. This right here. Do we see this? That's what we want to click on if we don't have it on already. And that's going to bring you up. So we click here, SOXL. There it is, enter. Go here to the right. It's miscellaneous because it's an ETF. This tells you the daily volume and such. So 54 million. It's quite good liquidity. You can get in and out of this very easily with a lot of money, and you've got assets under management of 11 billion. Has a dividend yield of not even 1%. It's composed of stocks basically, and other information. It includes ADRs, which are foreign-owned companies like Taiwan Semiconductor. I think it's got ASM and ASML. This is a ton. Not sure if RIM. I think ARM and RIM are. I think they're not ADRs, but they are foreign companies. And we want to go here to key stats, and then we click on this arrow. Tells you the discount to premium to net NAV for short. Total holdings 31. So how do I see those total holdings? I think I might have to go to another site. About the fund. Let's see here. This is their expense ratio. The lower the better. Doesn't really matter for this because it's just an ETF of, and it rebalances these semiconductors daily, meaning that over the long haul, targeted returns could look significantly different due to compounding effects of this daily rebalance. It tracks the PHLX semiconductor. So PHLX. No, that is not available, but that's what you'd want to look at, and it's going to show you all the different stocks that are in the portfolio. Its biggest holding is Nvidia, of course, and it's got all the greats, AMD, Intel, etc., etc. So what are we looking at here? We're looking at the daily. We are looking at significant levels. So let's go back. We're scrolling down on our mouse. And let's go back. This is when the market started to become volatile. So let's start drawing some lines here. Okay. We want to put our cursor where we want the line to be. Alt H. Okay, there's another one. Alt H. Here's another one. Alt H. Alright, now this is where we're at. We're not at all-time highs. We're in between here. So we're in between these two highs that are very significant. And this is what we're looking at currently. Now, there was a great buying opportunity here in April, Monday the 22nd. Because we have something here called the RSI. So go to indicators, click that. Type in RSI, Relative Strength Index. Go ahead and click that, and you'll get something like this. This RSI was at the bottom of the range, and as you can see, it was at the bottom of the range in September and October. And what happened in October? Absolutely massive run up from October all the way to March of 2024. Massive, massive run up. Incredible. The channel, which would have started out like this, just went way above there. And that became a great selling time. Remember, we're all getting better. We're all looking at what happened in the past and trying to get a piece of that in the future. It overstepped its bounds. It went out of this channel, this well-respected channel that had many touch points on the bottom and the top. Now, when did you draw this channel? Probably would have drawn it here in January. It would have looked like that. If you had drawn it here in January, it would have looked something like that. You don't have too many touch points at the bottom, but it makes sense, right? And then it gets better fitted the longer we go on. And let's say we're here in February, and then we see it go up. We don't sell it until it comes back down. So when it breaches this and it hits this doji candle, so you see how this candle here has got no body to it. This red candle is a big body. This green candle is a big body. And this red candle here, it's got almost no body. It's got a line. It's a doji. This red one. It's floating out in space. It's almost not connected to the next candle. Those are reversal candles. So that's when you would get out of your position. Not 100% because you're still in a bullish uptrend. You haven't changed that. You're not going to get out 100% until you violated your buy. So let's say somehow you bought it here for $21. Well, you'd still have a position here. And you would still have a position here. You would still have some position. You're not going to get totally out until it goes negative. And those positions, even though, let's say you hold on to only 10% of that position can go 10x. And so that 10% could turn into a whole nother portfolio. Your 100% portfolio that you have in, and so every stock that you have is its own portfolio. So you have a portfolio of many stocks, and then inside of that portfolio is a sub-portfolio for the stock. So for instance, for Celsius, I have shares and I have options, and I'm always changing it, and so that's its own portfolio. Now sometimes you can group stocks together. Like for instance, I pair up SMCI and NVIDIA, and I buy the bullish, I buy NVIDIA, and on the bearish, I short SMCI. Now they're both bullish here, but I pair them together as a portfolio. Wingstop's portfolio is very complicated. I have a VIX portfolio, and I'm in and out of that all the time. I'm trying to guess where the bottoms are. I'm basically below 13 seems to be a good buy right now. But right now I'm out of it, and we can get into those discussions later on. But if we go back, so you come above the channel, you sell part of your portfolio, you keep part of it, because it's violated the rules here. The rules here, you see the orange line, you see the confluence, you see how it broke your channel, then it broke the orange line, then it hits this doji. Well, that's a sell signal from the heavens. That is almost too good to be true. Yeah, it went higher, but then what? Reality struck. These kind of candles that come up higher and then they get rejected so massively, that's just FOMO. People just getting in, and the market knows that has to get crushed. Got crushed, and it continued down. We never violated the bottom of this channel. So like I was saying about the RSI, you had this down bottom point here, and we know that the last bottom point, what an epic run. So here we have this bottom point. So we just buy it. We just put in 1% of our total portfolio, for instance. I mean, you could put in 0.5%, you can put in whatever you want. It depends. Maybe you already have a 1% of your portfolio in. Well, you can put in another 1% here because it's just such a good indication of what's going on. And now in between these two highs here, these two lines that we've drawn before, we are below the midpoint. And you notice how in the trend line here, every time we got below the midpoint, it was actually a great time to buy. So we're in a bullish uptrend on different time scales. Let's go to the weekly. So on the weekly, bullish since September, October. Daily, let's look at that. Bullish. Different views of things. Let's look at the 1 hour. The 1 hour here. Now we got to go back in time. Imagine that we're here and we're looking at the 1 hour. The 1 hour is flat. Look at that. It's nice and flat. And if we look at this low point here, push shift to get a straight line. So there's a zone there that we could say, and it could bounce off that zone because we have Confluence here. So we don't know if it's going to bounce off that zone. Also, let me get rid of this so that we don't confuse things. Also, let's look at this here. Like I said, the midpoint. You see the midpoint here, this dotted line? We went below it, and we're in a bullish uptrend on the daily. So whenever we get below this, that becomes a green light. And we want as many green lights as we can. So there's one green light. The other green light is here in the RSI. Another green light is the fact that when we go to the 1 hour, we're kind of even. And if we go back a little bit more on the 1 hour, we can see that we've got this level here that goes from these highs to these lows. This level that we're just dipping into. That's a green light. And we got the fact that seasonality. It's April. April going into May. They say May, sell in May and go away. So that means that May is bullish. But that's kind of going out because seasonality is a seasonal thing over decades. And so over the last 50, 60 years, that was a thing. But now things change. You know that the Earth is rotating and that the magnetic north is changing. Do you know that? That's why learning about science and learning about how everything comes together in science. And we're looking at a two-dimensional space, but if you could view this in a three-dimensional space, if you could view that this line here is wrapped on a globe, and how you have meridians, and you have equators, and we're going to get into that some other time. I just want to touch upon that. We're going to think on a higher level in other videos, and I just want to throw that out there so that you're not completely taken off guard, because this is actually incredibly complicated stuff that's on a two-dimensional level here, and all you're seeing is a two-dimensional thing. You see the ups and downs in time. So it's one-dimensional in time is the second dimension. And then you can manipulate the time. So we're manipulating that on this level here. And we don't manipulate the ups and downs. The up and downs, we just see those constantly, but we can manipulate the time basis, which is the X. The Y is the ups and downs of the prices, and they're seen through these candles, and we'll get into the candles at another point. We'll see the in-depths of those, and we see the confluences. We had green light 1. This here is called the MACD. So we hit the bottom of the MACD. So there's green light 2. We look at volume here. We can ascertain that we had a bunch of red volume, and then on a lesser green volume, the stock went up, and then again on a lesser green. So that means less resistance, and we'll get into that because sometimes it doesn't mean that. So then we have all these green light 1, green light 2, green light 3. The Heartline, like I had drawn out here, it's green light 4. On the 1 hour, we drew the zones on the 1 hour, and remember, this is where we're at. May. Was it May or was it April? We drew that other line, and that was another green. And then we look at the long term, and this is the most important, the weekly. The trend is your friend, and we go with that. And we're going to get into more complicated stuff later on. I just want to touch on these things. Don't want to give too much information. Just watch a video a day, and then you'll start to absorb the information. So you don't have to know anything. Just take it easy. You're absorbing it through osmosis. And hope to see you again tomorrow.